Are you an authentic classic trader of the world?
Welcome everyone to Traders of the World, our new interview show where we bring inspiring stories about the financial market and incredible guests. I am Matheus Massario and I am extremely excited to be here. With me, I have Flavio Lemos.
Hello world. Good morning, good afternoon, or good evening, wherever you may be around the world. I'm Professor Flavio Lemos, chairman of the Brazilian local chapter of the CMT Association, and also author of some investment books. And we are speaking English because we want this show to inspire new traders around the world. I hope you like it and subscribe to our channel.
Great, I'm certain that we will have an amazing conversation with our guest. Speaking of our guest, today, he is the founder of Tech Charts, a research and trading firm that educates traders and investors on classical charting principles and helps them identify investment opportunities via global equity market reports. Flavio, is he a CMT member?
Of course, he is a chartered market technician with more than 15 years of experience as a classical chart trader and global equity market analyst. Also, he holds a master's degree in economics.
Before Tech Charts, he worked as senior technical analyst and fund manager at the largest leading bank, the National Bank of Abu Dhabi. He also worked for government-owned Abu Dhabi Investment Company as a portfolio manager, focusing on markets in the Middle East and North Africa, as well as helping the company devise various hedging strategies. In addition to that, he worked at a privately owned conglomerate and managed proprietary investments focusing on global financial markets. Please welcome Mr. Aksel Kibar.
Hi, Flavio. Hi, Matheus. Thanks for the introduction. It's a pleasure to be on your show. Thanks for having me today. It's great to talk to you guys, like-minded colleagues, chartists who are involved in technical analysis.
Thank you so much for being here, Aksel. So, Aksel, tell us about your beginning. Where are you from? Where do you live now? What did you study? What was your beginning?
So I'm from originally from Turkey. I'm from Istanbul. I studied economics as a bachelor degree, and then followed by master's degree in economics as well. So I completed my master's degree in Canada, Concordia University. It was an interesting couple of years there, where I got the chance to complete my chartered market technician certificate exams as well. It was a much better environment to take the exam as well, because I had access to a massive library where I was able to read the books and study with people who were taking the exam. So it was a great environment. It was around 2005, 2006. So until that time, around 2000, year 2000, I was introduced to stock markets and technical analysis back in Turkey, where I did my internship. And while I was doing my internship, I was already studying charting and technical analysis and reading books, ordering them from Amazon, and building my knowledge. So when I went to Canada to take the CMT exams, basically I was ready for the first level and then the second level, the most difficult ones, obviously the third level, which needed more time to prepare and understand the advanced topics. So this all happened in Canada, where I finished my master's degree and also the chartered market technician exams. After that, I moved to basically to Turkey again, and it was maybe a couple of months later, I found the opportunity in the UAE, where I started as a senior technical analyst. So the journey has been traveling to different continents, studying, learning, and applying the knowledge. So it has been so far lots of charts, many years of charts.
So you said you have worked at the largest lending bank, the National Bank of Abu Dhabi. Up from the start, what did you learn to do and not to do there?
So basically, when I joined the National Bank of Abu Dhabi, I was fortunate, I was lucky enough to have a pioneer, a visionary CIO at the time, who knew what CMT was. So let's go back to 2005, 2006, where the financial world was dominated by fundamental analysts. And CFA was the recognized charter, and CMT was not known much, but by few visionaries, by few people who are in the field, it was known. So the job opportunity was advertised as somebody that we're looking for that holds the chartered market technician designation. So it was a great opportunity to join, knowing that they actually are looking for the qualities that I have. So it was really interesting opportunity. So when I joined, my CIO and I sat down several hours on what is required from me in the bank as a senior technical analyst. So my job was to support the fund managers there with the weekly and monthly scale price charts, any breakouts that are happening, and most important, any major breakdowns that are happening, which actually was the main driver of the need for a technical analyst to avoid major drawdowns or helping the funds to move to cash as soon as possible, because those breakdowns in a not very liquid market can be really helpful to exit as early as possible and beat the benchmarks by staying in cash with certain percentage of the funds. So this was the need in the beginning, which later, with my calls, the senior management realized that there's an opportunity here to hand over the trading fund. So then I started managing the largest fund in the UAE, the bank's UAE trading fund, which was at the time close to $400 million. And those were the days where the real estate, the subprime hasn't happened yet. So we were just around that time, 2007, 2008, when I basically took over the fund's management and started managing it. And it was around maybe MSCI, we were benchmarked against the MSCI UAE index, which was somewhere around 25 to 30 stocks. And of course, in those type of markets, you have large weight in blue chips. So the biggest weights in those days were the real estate sector. And so having a call on the real estate was really required at the time. And it was like one of the major blue chips there, MR Properties, that gave the early warning signals of a major breakdown, which spilled over to the whole real estate market afterwards. that was crucial in acting on those signals. So starting as a technical analyst and then starting to manage the fund with a couple of important moves, I was able to help the bank protect a part of the capital, because as a this is not a hedge fund, so it's the traditional funds where you cannot you have limits not to you cannot go certain level of cash and so on. So whatever was required, I did at the maximum available capability to use technical analysis and mostly classical charting principles to manage the fund at the time. And yeah.
And minimize all the losses that come after that, no? Because of that.
Yeah, the real estate market collapsed. I can pull up a chart to show what actually at the time I was looking at. So this is the price chart of MR properties at the time. What I was seeing as we were getting into the second quarter of 2008, right around the subprime mortgage crisis in the US and globally, the real estate crash. So this is what I was seeing. It was a perfect rectangle which had several tests of the lower boundary, and that breakdown taking place here, which is approximately the time that I was able to liquidate major amount of the holdings, and it was followed by this crash. So this was MR Properties at the time after a huge bull run in 2004, 2005, 2006, topping, and classical chartists will realize this pattern: left shoulder, head, right shoulder. So a head and shoulder reversal there, followed by the rectangle, and then the breakdown. So this was a crystal clear setup at the time, but it was, of course, very difficult to apply this for many traders and fund managers, because this was one of the biggest components in the index. So by reducing this, you're exposed to any kind of reverse movement, and you can easily end up underperforming the benchmark. But this was a decision that was taken at the time.
Okay.
Nice. Aksel, as always here in the show, I need to ask this. What was your worst and best trade, and what have you learned with it?
Okay, so there has been a couple of good trades that we've applied. So after National Bank of Abu Dhabi, I moved to two other different entities in the UAE. Those were semi-government entities. One of them was Abu Dhabi Investment Company, Invest AD. The other one was Emirates International Investment Company. So in those places, I was more flexible because there was no major structured fund, but there was more prop capital. So we did a lot of hedging, and because we were exposed to the regional markets and in a corrective market environment, when everything sells off, liquidity dries up, and you cannot liquidate illiquid assets. So to be able to protect the downside, hedge against these downtrending we did some liquid hedgings, like for example, going long gold, shorting copper because of the global demand story. And let me quickly pull up those charts as well to show you approximately where those decision makings and what was it based on. So let me start first with gold trade. This was one of our darling at the time, and it was a really good setup. So this was in 2009, right after I moved to Abu Dhabi investment company. In quarter 3, quarter 4, gold was breaking above 1,000 level. And we classical chartists call this head and shoulder continuation. So the left shoulder, the head, and the right shoulder, and even the right shoulder formed in the form of a textbook ascending triangle, which broke out on the upside, pulled back, and then continued much higher until to a point where the reverse decision was taken. Obviously, you don't know where the price is going to peak, and we started consolidating in this range about almost a year. We were in this range until the price started breaking down 1,550s, which was the time when we reversed that long position. But it helped us protect much of the corrective period in the regional equities with this strong uptrend at the time. So this was, again, a decision that was based on classical charting principles and very simple support and resistance breakouts. This was one of the good ones. Another good trade was in another institution where we shorted the copper move. It was a clean descending triangle with, again, several tests of the lower boundary. So we basically shorted this move and tried to capture this part and hedged much of the long regional equity exposure. So this also was another great trade. Obviously, MR was another one. And the worst one was the most challenging environment that we've experienced after the markets crashed following the subprime. Many markets in the world rebounded sharply, but the markets that we were involved, the UAE markets, for example, or the other MENA markets, it took a lot of time for that supply of stocks to be absorbed and the market to recover again. So it was maybe a good 2 years, 2 to 3 years of chop back and forth without giving us a clear direction. And it was one of the most difficult time to manage funds and portfolios. And eventually the market, this is the Dubai Financial Market General Index. Eventually the market formed that left shoulder, head, and right shoulder and broke out on the upside with the news that UAE was going to be included in the emerging markets index. So that was the main driver at the time. But even that anticipation of news around 2011 and 2012 didn't help the market to bottom that fast. So what did we learn? What I learned from those is that markets can remain illiquid, can remain choppy for a long period of time. and you just need to ride those waves. There's no easy way out of it. Another thing about the good trades is that what I learned is when you're seeing a clean chart pattern completing, you have to take that signal and you have to go with it. There is no place for doubt with breakouts. Breakouts can fail. You can have your points where you would tell yourself ahead of time that this is the place that I would think that I'm wrong with this, or this is a chart pattern that is morphing, it's not working out. So you can have those levels, but when the breakout is taking place, you have to step to the line and take action. And the levels that we've taken action on good trades, looking back, were the right ones. And now looking back, I can say that uh, definitely those moves should have been benefited from. And going forward, when a pattern like that appears and on a long-term chart, again, one needs to step to the line and take action.
So, Axel, which technical tools specifically do you look at? I know we saw you always lose patterns, but do you have a checklist? Do you have use any indicators, volume, average, oscillators? Give me some examples.
Yeah. So what I do is, first of all, for me, the classical charting principles are the go-to source in identifying setups. So here are the chart patterns that I focus on, and I don't complicate things. Uh, I know there are so many different kinds of chart patterns now, and different names given to them. But I go with the old school: uh, ascending triangle, descending triangle, cup rectangle, head and shoulder top rectangle, head and shoulder bottom. So these are the 8 setups that I usually try to identify on price charts. I don't use indicators. Um, every now and then, I might look at some trend following indicators like MACD, the old school. Um, I have the 200-day moving average as a trend filter on my charts. Sometimes I get the question, why not 50-day? Why not 100-day? Well, you can pick those as long as it is some kind of a trend following indicator on your time frame. I find that 200-day works with my time frame because I like to capture a little bit longer term trends. And my main motivation is to go long, for example, a bullish chart pattern above the 200-day moving average, and make sure to short a bearish chart pattern below the 200-day moving average. So anything in between, I try to avoid those signals. So basically, pure price action, uh, even even with the chart patterns that I look at, I only look at the price information. Um, for example, volume, it's good to have. Sometimes I look at it, but it's not a tool that for me, is a decision making. It's involved in a decision making.
Okay.
Nice. And what is your personal style as a trader? Are you a swing trader, a day trader, buy and hold investor? Which one are you?
I'm a breakout trader, and you can say that I'm a position trader. Like, for example, a position could be held um, from a day to a month. That's the time period that I hold those breakouts if they survive.
Axel, what's your personal trading routine? Could you explain in details how is your trading process?
Well, my trading process is this. First of all, my trading, 70% of my trading process is research. So I do a lot of chart analysis. For example, I have divided global equities into 4 different pockets. I say Americas, Europe, Middle East and Africa, and Asia. So after each market's close, for example, in half an hour, US markets will close. After the close, I sit down and review the daily charts of the research universe. When Asia closes, I sit down and work on the Asia equities. Same thing applies for Europe, Middle East, and Africa as well. So here in this research universe, I try to identify well-defined chart patterns. What do I mean by that? I don't go and specifically look for, oh, there is a head and shoulder here, or is there a cup with handle? My main motivation is to find horizontal boundaries that are tested minimum 3 times. So, for example, let me pull up a chart here so we can have a look while I explain.
At least 330 in the horizontal support or resistance. So
Yes. That actually allows me to understand if the market is recognizing that level. So the more battle around the support and resistance, the better it is. For example, you can see a stock from Japan. This is a breakout alert that I shared and traded as well. So the chart on the left-hand side is the weekly scale. The chart on the right-hand side is the daily scale. Now, this daily scale is the ascending triangle after the initial breakout. So both charts are actually ascending triangles, but they're like fractals. So initial breakout is from a 2-year long ascending triangle here. And you can see 1, 2, 3, 4, 5 touch points. So this clearly shows me that it's a level that market have recognized. So around here, I might have included this in my watch list. And then I wait. I put alerts and I wait. Even this touch, I wait. I wait for this touch as well. And then when the breakout takes place, that's when you jump in for the signal. So this long-term ascending triangle breakout takes place and you try to capture this trend. But meanwhile, this is my weekly scale research, which means I do it at the weekends. That's part of the routine as well. So what I do for daily charts, I do it with weekly charts at the weekends to be able to capture longer term patterns on weekly scale. They give me a better feel of the direction of the stock. And then if you look at this ascending triangle, again, it was identified as a breakout opportunity. 1, 2, 3 touch points. And then here comes the breakout, followed by this move to the ascending triangle price target. So this is a breakout on a daily scale. So basically, without this being an ascending triangle, my main motivation is, as I said, to find those horizontal boundaries that are tested several times, and eventually the stock breaches that level, be it on weekly, be it on daily scale.
Nice. And do you look to any fundamentals?
No, I don't look at fundamentals. And this is something that I don't think I'll be able to have the time to do it, because I go through so many charts and I flip through them. And when I find something, I just look at which industry is it in, and maybe a slight background of the company. But I really don't have the time and the knowledge to run any fundamental research on the stock. It could be a weakness, but sometimes it's also a positive, because the less you know, the more purist you are about the price action, the less biases you would have about the company. So, for example, when I open a chart, I don't know if the chart is Apple, Netflix, or any other company, like in Japan, for example, this one, EJ Holdings. So I wouldn't know the ticker even. So that's how I go through the charts. For me, first is to be able to see that horizontal support and resistances. And then I start diving in to the ticker and a slight background of the company.
So the last time you saw Elliott waves down or seasonality was in the CMT exam that we were obliged to know it for the test. So
Yes, actually, in 2000, when I started as an intern, uh, my boss was Elliottician. So I learned Elliott wave in detail. Maybe if I know classical charting at the level of 9 out of 10, I know Elliott wave 7 out of 10. So I'm good at Elliott wave, but it is really, really difficult to apply Elliott wave to a vast majority of research universe that I'm running. I had to drop it when I started managing the fund, because when you're looking at 50, 60 names in a universe, even that is really difficult. Maybe with indices, it gives a nice idea of what to expect, but it's really difficult to do research, um, be it GAN or seasonality on individual stocks.
Do you recommend that investors and traders use risk management?
Definitely. Definitely. And when we're talking about risk management, it is completely different for each trader and investor. Um, if you're a short-term trader, your risk management is different. If you're a long-term investor, that risk management will be totally different, and instruments will be different as well. But in all cases, risk management needs to be applied one way or another. You have to know at what levels your thesis is wrong, your uh, your move was wrong. What put you into the initial investment should have a level where you would say, this is exactly the opposite signal that I got, and I need to cut my losses.
do you use any volume to find those breakouts, to confirm that these breakouts are happening?
With volume, I have an interesting relationship, because this is something that I'm always asked, and obviously the books that we read in technical analysis and classical charting also stress the importance of volume. But again, when I was working in the Middle East, liquidity is a concern. Okay, and those markets were not behaving the same way as US equities or European equities. So sometimes breakouts used to happen with low volume. And there is no way I can ignore that breakout, because then you would either be underweight the stock or miss an opportunity. Sometimes uh, share trading used to be in OTC market. Sometimes we used to look for block trades and call different funds if they are willing to sell a bunch of share, which used to go out of the exchange. So you won't be able to see that volume. Uh, so for that reason, I said, okay, I think I'm gonna just focus on the pure price information. And so far I've been just looking at pure price action rather than confirming it with volume. An interesting chart that I share with the colleagues and members is, let me pull that up because it's an interesting one. I know one example would not be evidence of such decision making, but this is a chart that I've analyzed at the time, and breakout. So you can see, for example, here again a textbook rectangle, 1, 2, 3, 4, 5 touch points, and then the breakout takes place. And here in this area, this is a weekly scale price chart. Here in this area, you can see that there's no volume, but the breakout is already taking place. So the volume is picking up later in the strong move. So if you're just looking at the volume here, you might actually miss this opportunity and you say, okay, there is not enough volume for me to enter. But it was a huge move afterwards. So those type of price actions I have experienced. So I decided to stick with the actual price action in terms of acting on the breakout signals.
Great. And Axel, where the audience could follow your work on social media, could you suggest some good books?
Yeah, so on social media, they can find me at Tech Charts. So I post charts, ideas, breakout opportunities, and my website is www.techcharts.net. I also have a YouTube channel. Tech Charts as a YouTube channel where I'm thinking of adding more and more educational videos as the trades are happening, how it is moving, and fine points around those breakouts. In terms of books, classical charting principles, if they're interested in, a good start is Richard Schabacher's book, followed by, I would say, Edwards and McGee. Obviously, those books is a must-have if you're interested in classical charting and should be a reference in your library. I found from the volatility perspective, John Bollinger's book really valuable. Also, from a position sizing, risk management, Van Tarp has really good content on the topic. If you want to look at today's application as a trader, Peter Brand's Diary of a Professional Commodity Trader, and his previous book also, that Bruce Babcock has a interview with him also, is very valuable, especially looking at old charts and seeing how in today's market those charts can be useful, those patterns can be still applicable to different exchanges and stocks. So those are the books that comes to my mind. Obviously, Market Wizard series by Jack Schwager is great. Every trader should read that. I think those are the ones that comes to my mind.
What a wonderful insights you gave us today. Axel, what's your final advice you could give for a younger trader starting today?
Okay, so young traders starting today will go through different cycles. Okay, like everyone else, we all did, and they will try different methods, different tools, different techniques, different indicators, and always keep on searching for that holy grail. And there is no holy grail. Okay. What it does, chasing that holy grail, is you lose time to master one specific tool. You lose time jumping from one thing to another, and maybe eventually you give up thinking that this thing doesn't work or nobody makes money in the financial markets, and you just drop out. Versus if you stick with one method, even one indicator, or just basic support and resistance levels, and add a sound risk management strategy around it, and stick with it through different cycles, eventually you're going to see that you're going to find the success that you want. You cannot be rich from this, but it can become a business. It can be a business like any other trading businesses, like somebody selling fruit and vegetables or commodities, or the same dynamics are applied. There is the loss, there is the profit, there is the opportunity cost, and so on. So sticking with one methodology, finding that style, and applying it and trying to master that craft is what I would advise to young traders. When the times get tough, don't try to find other areas or tools, indicators that optimizes this, optimizes that, and those will just make you lose time, and eventually you will lose the time that you can master on that specific tool. Good times will come, bad times will come, but eventually one tool, you can master it with its positives and negatives.
And we come to an end of this amazing interview with Aksel Kibar. We want to thank you all, our viewers, for joining us on this journey.
We also want to say thank you to Aksel for sharing his wonderful insights, and we hope that his efforts and dedication inspire other traders around the world. Thank you, Aksel.
Thanks, Flavio. Thanks, Matheus.
Thank you, everyone. We'll see you in the next interview.